Hi, good morning. Just before I begin, out of curiosity, how many people in this room have solar panels on their rooftops? Okay, a few. So I'm hoping that each year that number will increase, and I bet in about 10 years, especially being in California, the majority of people will have raised their hands. Today it's probably around 2 to 5% in the room. And I'd like to talk a little bit about solar specifically and just about what Solaria does briefly. But then the primary topic that I've been asked to address is how is managing a company different today than it was 6 months to a year ago, particularly a cleantech company, and also a little bit on how the current federal policies could affect a company like Solaria in the solar and cleantech sectors. So briefly about Solaria. First of all, we have a unique technology where we combine optics with silicon to make high-efficiency, low-cost solar panels. We have raised about $77 million from institutional venture capital firms and strategic partners. We're headquartered here in Silicon Valley in Fremont. We also have office in Berlin, in Germany, and an Asian presence. And our first modules were recently certified, and they're deployed at our customer sites. And the certification process is quite a laborious process in the solar industry. One thing that really is very different in solar compared to computers and semiconductors is the long-term reliability. Products have to be warranted for 25 years. And a lot of people ask me, why is innovation so slow in solar? And that is the reason why. When you make a computer, it does not have to sit outside for 25 years and operate the way it did the first day it began. So very, very different dynamics in the industry. Just a little bit about the opportunity, both in solar and for Solaria specifically. Two things going on. First is that there's a rapidly growing silicon supply. There's different analysts that have different curves of how fast it's growing. But basically, we're looking at more silicon, and primarily for solar, coming online in the next 3 to 4 years than has come online in the last 50. Okay, so tremendous growth on the supply side. And then we're reaching markets, in particular California and Italy to begin with, where we're attaining grid parity, which means that the cost of producing power from solar systems is the same or less than power supplied by the grid. And in many parts of California, we're about to reach that if we haven't already. In terms of our value proposition, really the thing you hear probably a lot about in solar is grid parity. And grid parity is a complex term because electricity prices are very different region by region, and the amount of sunshine that falls is very different region by region. So you have to look at each market very specifically to understand what grid parity means. But in general, it means driving the cost down. And driving the cost down of solar is really the great opportunity we have, because other forms of electricity generation that are based on fossil fuels are going up in cost each year. And solar is coming down in cost each year. And as those curves intersect and go the other way, that's really what we call grid parity. So from Solaria's point of view, there's really three things we're focused on. Is we use silicon solar cells. We singulate them into smaller pieces and layer on top optics, and we're able to make solar panels with half the silicon cell material as standard silicon solar panels in the industry today, thereby lowering the cost. We also have optimized those products for what are called single-axis trackers that track the sun to maximize energy production. And we're optimizing the voltage configurations, because that's the last part. Is this panel, making a cheap panel is not enough. It also is, how does it go into a system? And that's one of the next great frontiers of innovation in the solar industry. So Solaria has put together a technology platform to address that. But again, all of the companies in the industry, including us, are really focused on lowering the cost and attaining grid parity. And then lastly, our first modules are certified to first IEC standards, which is in Europe, and then and now UL in US. So in terms of the main topic here, managing the company, I was asked really two questions on this topic. One is, how is managing a clean tech company different today than it was 6 months or a year ago? And then how do I think it'll be different 6 months to a year from today? So I'll answer those two separately. The first thing is how is it different than managing it 6 months or a year ago? First of all, I would say it's completely different. The reality that I face each day going into the company is very different. In some sense, the office looks the same, people look the same and all, but what I think about, what we think about as a management team, what we focus on is very, very different. And how it's different is really we rethink everything in terms of the assumptions that we have in growing the company. The solar industry in particular, in addition to the economic downturn, is facing a pretty significant downturn itself. And a lot of that, primarily it's also driven by the economic downturn. One thing that people who are not that close to the industry, they're surprised by that, by the fact that solar industry is in a downturn, because what you read is that solar industry is growing, and it is growing, but it's not growing as rapidly as it was before. And the supply side was continuing to grow. What happened was, with the financial meltdown that occurred, solar is very, very dependent on financing. It's very capital intensive. When you put a large solar installation in, that can cost anywhere from $1 million to $100 million to even more dollars for that installation. So banks are very critical here to finance these systems, and they have been financing it because it's been a very good investment. Well, now banks are not lending money, or if they are, it's at a very high interest rate. And what's interesting is, if you look at the cost per kilowatt hour of a solar system, the single largest variable in that is interest rates, more than the cost of the panel, believe it or not. Because it's amortized over 25 years. So interest rates are a huge driver for the solar industry. Interest rates have been low. That's been very good. Interest rates are very high if you can get a loan. So that's caused a severe curtailment of demand. Even though demand has not fallen off completely, it's still there, and it's still an industry that is growing. But when an industry was prepared to grow 50–60% a year, which is what happened in the last 5–6 years, and it only grows by 10%, that has a huge effect on the industry and the players in the industry. So really, what I call the bubble has burst for the industry, and we are in a phase of the solar industry where we're going to really, in my view, retrench and come out of this much stronger and better for the ones that survive. And that's really one of the key things that we think about now as a company, is not just success, but before success is survival first. And making sure that as a company, especially as a startup company, you can survive through these times and then eventually succeed, and build what you need to today to eventually succeed, more than market share growth today, because that's not as important, in my view, as how we're going to be a real leader a few years out as this industry grows again and reaches the potential that it's got. So expense reduction is key. Cash is king. That's one of the things we looked at in the company, is how to manage cash more tightly, more efficiently. This is not something that solar companies were focusing a lot in the last few years. It was much more of, you can raise a lot of money, you can spend it, grow, 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 and if you show that you have a big potential, you can raise a lot more money. That is not the case anymore. People are looking for what companies are capital efficient, what companies are going to be able to grow their business with as little capital as possible, and still create a viable business model.